The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, there's a lot of things happening in River City today, folks. We've got the markets under a great deal of pressure. We take a look at the German DAX. You can see from the daily, and then also the second chart that I posted, which is the weekly. You can see at what a critical level it is there, and if it's already gone below that or very close to it, that is going to spell even more to the downside in the European markets. One of the charts that I focused on in the newsletter this week came from John Murphy, and I think it really tells a story on a worldwide basis of what is going on, and I'll bring this up to you. This is the World Stock Index from foreign stocks. You'll notice it hit the Fibonacci relationship number of 61.8. It hit it 1, 2, 3, 4 times, and of course the last time you see this last week we've had a big move down, and it's one of the strongest moves down that it had since way back in January of 2018. So this is not a very bullish picture on the longer term market for sure. Now, another one that has been incredibly bearish that we've been talking about for quite some time has been the Hang Seng, and the Hang Seng today just literally came apart. It was down about 3%. They're riding over there. It's just really amazing. Gaps all the way down. And we're really close to 25,000, folks, 25,900. So this is not very good what's going on over there in Hong Kong with all the rioting, I guess, and they're actually throwing things through windows, which is not very that people over there just don't do that, but that's what's happening right now. And we've broken down in stocks, but there was nothing that was not unexpected, folks. We've been watching. Let's just bring the other one from John Murphy up because I thought it was quite interesting. I added a few things here to John Murphy's chart. You'll notice on the bottom, you'll notice I put in those green dotted lines just to highlight the 1, 2, 3, 4, 5 expanding triangle. And if you notice, the 1, 3, 5 is a 3 drive to a top pattern. But the key to this, folks, is if you look at the red arrows that I've marked there, that's how the market came off of 0.1, 0.3, and 0.5. And as you can see, 0.5 doesn't even have today's action in it, which is going to be, substantially below 2,900 is there also. So that's telling you that we're heading lower. And how much lower, no one knows that. But what John was trying to focus on here was to showing you the RSI divergence. If you'll notice the top of that chart, you'll see the divergence when the market makes a new high, but the RSI didn't. And then he also looked at this histogram, which is the moving average convergence divergence that was done by Gerald Appel, and that also had some divergence. So those divergences, do pretty well, and no one does it any better than Steve Rhodes and Basil Chapman, because I've heard them time and time again highlight that. So when you hear those fellas talk, it'd be quite interesting, to listen to them of what they're actually talking about. But we have some bearish things out there, and I believe you'll be able to see what happened here. I mentioned in the newsletter how important it was that if the market went below Friday's low, it was incredibly weak. And the reason for that is, if you'll see, Friday's low there was exactly a 382 retracement of the move from way back in May, and now we have shattered that down. We're trading down close to 26,100. Well, in fact, we are there right now, and that tells us that with this move down, it's just starting to go lower. Now we're going to have some bounces, of course, but frankly, the overall tone of the market has certainly changed, whether it's all related to this news coming out of China about the renminbi trading above 7. Folks, when I was in China the first time, which was 95, the renminbi was 12. It went from 12 down to 5, and now it's back to 7. So, what's happening over there is not that big a deal. As a matter of fact, the currencies are actually holding up incredibly well. The currency market was just absolutely amazing because the euro, even though it backed off just a tiny bit, has rallied now and has come off that bottom that we said would most probably, be happening if, in fact, the market did not collapse. And that's, in fact, exactly what it's done. And if we take a look at this euro, it's having a pretty good rally in here. You're right, Terry. China is in big trouble. That is not good, what's going on over there. And not only that, but they're getting the double-edged swords of Hong Kong. And, they're going to have to come in there and help. Because this is not good when they start throwing stuff through windows and destroying property and stuff like that. It's just not, and they're disrupting traffic, and, it's just not running the way that it usually does. So I don't know what's going to happen. But if we remember that euro, because what we did is we mentioned to the euro that if you took a very, very close look at the U.S. dollar index, and that's what we're going to do right now. Here's that U.S. dollar index over the last 4 months. You can see a perfect 3-drive to a top pattern, folks. 1, 2, 3, bada bing, bada boom, right on target. AB equals CD right there at that 98.70, and we never got any higher than that. Even last night with all the craziness going on, the euro was holding its own and rallying. Even the British pound that nobody likes. And that even had a pretty nice rally and is still bouncing back a little bit too. The yen is absolutely coming apart, which is no big surprise. That's related to the weakness in the U.S. stock market. We'll get that up here so you can see here that we've got a big price objective down here in this Japanese yen, given the fact that we have this big move down the last 2 days. That that was a perfect Gartley up there at that 109 area. Now we're below, we're 105 and change. So what we're heading now is down to 103, which could be a double bottom way back here at that 104.20 level that we made in March of last year. So those are just some of the things that are going on. There's a lot of markets are pointing down, folks, based on the patterns. Now, remember, this is all related to technical analysis. It has nothing to do with the fundamental stuff. When I hear what's going on in the news, it goes over my head like a balloon because I don't even try to understand it. I just look at the charts and say, does this look okay? This not look okay? And that's all I was looking at. And if you get the newsletter 24/7, like I mentioned before, we're going to have volatility coming in here like you've not seen before. This is going to be a big surprise to people. This is just the beginning. This is not the this is not the end of a move. This is getting there up to that point. So we'll see. There's David again. Good job, David. Often haven't been bitten by the things they have written. David White. That's right. That's the financial journalist. Anyway, let's keep in mind here that I believe we're going to see volatility increase, really dramatically. Of course, that's something that I think we'll do. I'm going to be doing Tom O'Brien's show from 3 to 5 today. Eastern time. I'm going to do the 2 hours. I have a guest. The Market Technicians Association, Ed Carlson, will be my guest. And then I'll have Arch Crawford on, I believe, later. And then I'll have Bill Meridian on Friday. So we'll be looking. I will look at corn next, Ruby. You bet.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and Ruby's asked us to take a look at the corn market, and as you can see, it's set up into a buy zone. The problem is, as soon as the news came out that China was having this currency thing and that they stopped buying agricultural products, supposedly, the grains really started to sell off. That's when the news gets in there, and if you're not doing the news, you just put your stop in, and stand aside. That's basically just to show you how bad it is in one of these markets that we've been watching for quite some time that we don't trade very often is cotton, the fluff. If you take a look at this, you'll look at cotton. We made a bottom down here at around 62. We rallied up to just about a 382 retracement up there at 65. Folks, we're trading at 50, but we're trading at 57 in December cotton now. This morning. That's below the cost of production. Unless they're going to stop wearing clothes over there, and it's possible, there's going to be a bottom in cotton someday, but maybe not in our lifetime. But that's just what's going on here, folks. We're seeing it in hogs. They've quit buying hogs, so there's definitely a major trade war going on, and somebody's going to have to call uncle pretty soon. And I don't think it's going to be China because, they're more concerned about their standing than they are about their people. That's the bottom line. So, that's my 2 cents worth. So we'll have to wait and see. Regarding the bond market, folks, we've had some monster moves in bonds, just absolutely incredible. I wanted to get this up here to show you. We got almost up to the 61 level. Just let me get this up here so we'll be able to see it here. We went above the, in fact, we're trading. We're up. We had a $2,000 move up this morning and then a $1,000 move down. So we moved $3,000 already in the Treasury bonds. We've taken out the highs of August. And if you think I'm going to be riding on a boat over there in St. Petersburg, you're flat wrong. I'm not going to be doing that. But maybe this is the negative interest rates. I don't know why that would ever occur. But Germany had all across the federal or all of the German government bonds are all negative, every single one, all the way through the notes and the whole bit. Now, On Friday, when we had the big move in the Treasury notes and Treasury bonds, the 2-year note and the 5-year note and the 10-year note all have open interest about 3.9 million contracts. And there was virtually decreases in the 2-year and the 5-year notes, and the 10-year notes had a very, very slight increase, like 8,000 or something like that. Now, this is going to be really important what happens tonight when we get the numbers, because if the open interest decreases in these Treasury notes and bonds with action like this, that is short covering, and then it could be really interesting. So, but it also it's going to be dependent upon whether this open interest drops, because if new buyers came in, and that's always a possibility, these could go higher. So that's another one that we want to be watching, very, very closely. So pay attention to that. Gold took off. I mean, gold had a big run up here. We're trading. We got up to 1478, I believe, and we're not very far from 1490, which is the 1.618 expansion. We'll get this up here to take a look at it, and it's gone above that 3 drive to a top pattern that we were possibly forecasting up there at the 1469 level, but we did go through that. And but this is very emotional, folks, that we're seeing in these markets. This is when you get the Dow down 400 points, you're getting an idea that there is some, emotionalism in the market. But it's coming down, normally. I mean, there's no big gaps down. There's no, massive selling. It's just, continually bang, 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 and that means that it's got more to go to the downside. That's usually what it means. So we'll pay close attention to that as we walk through here and see some of those. If you have any questions, it's 877-927-6648. I'll be happy to answer them if I can. Another one that has really caught the fancy of everybody tonight, and that is the old Bitcoin. If you'll take a look here, we're getting really close to 12,000 in Bitcoin, folks. It was up about 9% last night. Just barely touching the 11, or went way above 11,000. We almost got to 12,000, and so it's had one heck of a move to the upside. I don't know whether it's related to what's happening in gold or not, but that is what is happening. So we'll be keeping an eye on it. Even though we don't trade it, we'll be watching it, quite a bit. So. Just a lot of things going on, and believe me, try to keep your sense about you, because this is what these markets are all about. These markets have been acting extremely bearish, even though you've had some stocks go up in the Dow Jones, and then the New York Stock Exchange, the NASDAQ has been going higher, but the New York Stock Exchange Index didn't go higher. The E-mini S&P did go higher, but what did it do? It just made nothing more than a, double 1.27 expansion. And here again, this was the same reason why we said that if the market was weak, if we got below 29.10, that it was probably going to go down. And you can see 28.75, which is very close to where we are right now, is a 50% retracement of the move from May, and it's only taken a week to get there. And if you go back and look at the double top way back in September, when we had the 3 drive to a top pattern, look how quickly that came down. And, the market is saying that it's going to be down the month of August and into early September. Now, whether it's going to continue all that time, it's not going to go down every day for sure. There's going to be bounces along the way. So, watch these key support levels. Anything below, if the S&P closes below 2870 today, that is going to be an incredibly bearish number. I mean, that's just going to it's just going to rock the boat, quite a bit. Let's just double check, see where we're trading. We're 28.86 right now, so that's an interesting one to take a look at. So watch it very, very closely. Now, someone's asked a question: was my artificial intelligence program any help last night in the market? Well, folks, sometimes it works, sometimes it doesn't. Let's just pull it up here. I'll just walk through what we were looking at last night. As you can see here, we'll pull this up. This is where we had the first rally back at that 29.05 level, and you'll notice that it's heading down for the rest of the evening, and that's exactly what did happen. It just kept dropping and dropping, and we're expecting it to get down, even a lot lower here before you'll be able to see it a little closer here in the NASDAQ as we put it up to take a look at it. But remember, this is a theoretical, experimental, observational tool, and that's the way you have to look at it. Okay, the one thing that you have to keep close mind, folks, when you have these straight up moves like we're having in bonds and notes, we don't see that very often. Who knows? So the question is, when does China really get involved in Hong Kong? Peter, I don't know the answer to that. I spoke with Sarah this morning, and she's in Florida visiting some of our dearest friends, and they're going to get there soon. They're not going to let this thing, in effect, mess with the financial markets, because the 6 largest banks in the world, folks, are Chinese banks. So you see where this is all going on, and this is a giant chess match. This should have been done a long time ago. It really should have. It should have been done a long time ago. This is the first time someone has stood up to the big boys over there, and that it's good, because this will all work out good in the long run. I think it's going to be a good thing, but short term.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hey, we got a really special treat this morning, folks. We got the Shane Man, the Wolf Man's on the pack. Shane, what are you seeing here, buddy? They're eating us alive today. They're going to be any relief?
Can you hear me?
Yes, perfect. You're coming in great.
All right. I was having some technical issues there. Well, let me see if I can share the screen with you. Let's see if we can take a look here. Can you see my screen?
Yes, I think they've posted it up without too much trouble.
Okay, so I just wanted to call in for a few minutes at your request here and talk to people about what I see in just in terms of the Fed. Now, I know that there is a cycle. People have been talking about the solar cycle running from July to September, October. But the main thing that I watch here is, can you see the screen?
No. For some reason, we don't. I don't have any control over it. So if you could send it to TFNN, they might be able to post it. But I'm certainly not able to do that.
How about now? Can they see the screen now?
Not yet. Let me see. Post. Why don't you post it to me? Oh, is that the one that you have that posted this morning at 11?
Okay, they say they have it now. Can you see it on the screen now?
Yeah, there we go. They're good. Yeah, I think we're okay.
Okay. So
yeah, I think we're okay.
I want to emphasize a point. I know this is super confusing for people because yes, it is true. There is an annual cycle that tops in July and goes down, and I have that one going through about early August. But we also have to understand that the Fed is coming in here, and every time that we've had a decline, the Fed has started a ramp-up period. So they go through these periods of what I call equilibrium and then firefighting. So I want to go back for a second to the November here, the December, November. Can you see the screen here?
Yes.
The chart?
Yes.
Okay,
yeah,
so this is what happened here. So the Fed goes to this period of equilibrium, and the market essentially tracks what the Fed is doing. This is the Fed down here at the bottom. This is a stochastic of the raw Fed data, and I've gone to the raw Fed data because the market is moving so fast now that it's really hard to track it using other indicators. So once the Fed rolled over, we were in this equilibrium, the market rolled over down here. But once it started selling off, the Fed goes into these periods that I call these ramp-up periods, and these firefighting ramp-up periods. And so in November, you see right here where they started ramping up right here, and the market started responding. Well,
yep.
I think they thought at that point that was enough, and then the market kept selling off because remember, in the long term, they were decreasing the juice. So they did another run up here in December, okay, as this was falling, because this is what I call the firefighting mode that they get into. And so that's what happened in November, December. So this is a very predictable pattern to follow in terms of the Fed. So let's fast forward now to what we're seeing now. So in the most recent decline, in the May decline, you can see here the exact same thing happened at the end of May when the market started declining. They went into this firefighting mode, and they were able to stop the sell-off there. Now, this sell-off came relatively unexpected, and I have had a very difficult time calling this S&P in terms of the turns on the short term. What I can tell you is that they are starting it again. You can see it right here. They're already starting the response, and I would expect that today at 10:30, once these bonds and auctions sales start, that they're going to start coming with the heat. And so, yes, what you are seeing is a valid downturn in a solar cycle and all of these things. I'm not saying that's not happening, but you have to understand that these are not natural phenomena, what I'm showing you. This is the Federal Reserve actively coming in and stemming the sell-off. So I expect this to happen once again. So this is a relatively microscopic decline. Now, if the market was going on its own without the Fed, you would see a vicious sell-off, the kind of sell-off that you're talking about and that a lot of people are talking about. But as long as this keeps happening with the Fed coming in here like this, it's going to be real hard for this market to go down. And even though you have these sell-offs going into, these cycles going off, it's very difficult to forecast when you have these type of interventions coming in like this, because this has nothing to do with cycles, astrology, or anything. This is the central bank coming in and stemming the selling. And so that I just want to emphasize that because it's very confusing, because everybody sees it going down and like, oh my God, this is it, and the bears are foaming at the mouth. But in the reality is, this is the reality. The Fed, this is the reality. This is what's going to dictate what happens with the market, as far as I've seen. Now, at some point that might fail, okay? But I have never seen it fail since 2009. And so in the long term, the Fed will outlast this, in my opinion. So everybody has their opinion, but that's my opinion.
Well, you've been spot on quite a bit, so I certainly respect what you're doing. The question, we have two questions out there. First is, this is what you're referring to. Is this the plunge protection team that we hear about?
Well, I don't know. I think that actually started, and it was I think that was a reaction to the 87 crash. But what they're doing now is far, far more sophisticated than that. This is a systematic process that they have mastered since 2009. And so there's many ways they can deploy capital now to these markets. And you have to understand that the future, everything tracks the futures. So if they're targeting futures, I mean, yes, these markets are huge and they're global, but if these markets are tracked or targeted at specific times, low volume times, or specific critical turning point times, they know that they can turn this and hit those buy and sell orders, and once that happens, the computer's trading kicks in and the rally can start. It's essentially a positive feedback loop, and they know this. A positive feedback loop means when something's going, it either goes faster and faster and faster, or slower and slower and slower. And when markets accelerate, fear is a positive feedback loop, so they're trying to come in with a negative feedback loop, like a thermostat on your AC, right? Mm-hmm. So they're essentially trying to just prevent these huge positive feedback loops to the downside, and so far they've succeeded. So I know everybody gets excited when this happens, like, oh my God, this is it. But I'm going to tell you, based off what I'm seeing, this is not it. This is not. They're going to do the same thing. They're going to come in and do it. I mean, that's just. Oh, go ahead.
Well, it makes sense. There's been good earnings. I mean, the fundamentalists sure think that this is nothing more than a reaction to what's going on in, with this currency thing. By the way, one of the other questions that we have this morning, Shane, is about Bitcoin. Do you have a feeling on that? Did you follow it at all?
I don't follow it too much because I don't have enough data. Like when I do the lunar and the solar cycles, I like to have a lot of data, quite a few years of data. It's getting close to the point to where I can start to track it, but we don't really track Bitcoin. This is actually a bundle of what we track. We trade 10 symbols every night. These were the trades last night. This is a live ticker of the trades that we track. So this is what I call my day of the week indicator. It's a specific signal. We track 3 different signals, 2 of 3. This is one of them, and this is a live ticker of the signals. So when I trade, I look at a bundle of symbols. Copper, silver, gold, corn, natural gas, oil, euro, pound, 10-year. Yes, and so I look at the bundle as a whole, and we have some misses in here. Like you could see gold right there missed last night, and copper missed. But when you're talking about probabilities, you're talking about a sample size. So I look at a bundle, 10 symbols. Bitcoin is just one outlier, and I would say it's probably as unpredictable as the ES in terms of tradability. Like if I had to pick one of these symbols that I think is the most unpredictable, is the ES for sure. But that's the one everybody loves to trade, and there's so many other good symbols out there. Now, Bitcoin, I looked at it the other day.
Hey, we got to pay some bills. Could you stay with us, Shane?
Absolutely.
Okay, we'll be right back with Shane Smolian, wolftrader.com.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks. We're talking with Shane Smolian, the Wolf Trader. Shane, we're talking about Bitcoin, and we see it's trading up near 12,000 again. Do you have any comments at all that you'd like to add about that?
I don't yet, and then let me just tell you that first trade date on the futures was, we're coming up on 2 years, and for me to have enough data to look at something, I need about 2 years. You can see here, this is a typical chart of something I would optimize. This is oil, okay? And so this is on a, I know you're doing right now research with market forecasting models, and this is essentially just that. This is a walk forward, and so I typically need about 2 years. So we're getting close on the Bitcoin. Now I also rewrote a lunar cycle here. I'm rewriting all the cycles, the solars, the lunars. I'm rewriting them custom. And I tried Bitcoin. I actually tried it last week, and I couldn't get it to come up with a rhythm. It doesn't have the same rhythm as the other symbols. So for me to have an opinion about something in terms of going in for a trade, I need enough data to do that. So perhaps in the spring I will have enough data, but right now, from what I've seen, I can't make an opinion on that. Mm-hmm. Going back here. This is a weekly chart. Now I wanted to show you, this is a weekly chart of some raw data. And the weekly chart, in the grand scheme of things, you can see that we are approaching, in terms of the Fed juice, this right here. You see we're heading down here. This is what I call my overbought, oversold indicator for the Fed juice. We're actually getting into an oversold condition on the Fed juice on a weekly time frame. Now on the daily, I showed you that they're starting to try to put out this fire, but this is, as far as I can see, they're still in equilibrium mode on the weekly time frame. In other words, if you look back here in December, they were really getting concerned to try to put out this fire in December. This one was a much bigger problem than what we're facing right now. This is really a tiny decline. It's just everybody gets excited when it starts to go down because we haven't seen a decline. So if you're a bear and you see it go down 400 points and the Dow, you think, oh my God, this is it. But again, until I see them fail, I have to stay bullish on this just from what I'm looking at, because again, from my perspective, from what I'm following here, the data that's in front of me, just the pure data, everything else is secondary to the Fed when it comes to the S&P. But it is a very unpredictable market, though. I mean, it's difficult. These, again, the pressure, the natural forces are down, and if people see that, and it's very frustrating because they're like, there's no way that, how can this thing keep going up? And that's true. Your observation is correct. I mean, it's true. It's natural forces are down, and anytime any little news comes out, whether it's, the Fed flubbing the press conference, whether it's Trump announcing that he's going to raise the tariffs, whether it's China coming out saying that they're going to devalue the currencies. I mean, you've had 3 really, really bad headlines come out, and that can start to trigger a sell-off. And that's true. So what everybody's seeing is true. It's not your observation is true, but and from what I've seen, this is what controls the market in terms of the ES. So that I just wanted to point that out to people, just to be careful into thinking that this, at some point, like I said, the Fed could fail, but I haven't seen it yet. And so from what I'm seeing, I can't see it going down for months and months and months and months, because they're already starting.
Contact here. I don't know if I've lost contact. Broadsword to Danny Boy. Broadsword to Danny Boy. Come in, Danny Boy. Yeah. I lost your voice there for a little bit. So, hey, Shane, tell the folks how they can reach you and about your Twitter service. Could you do that?
Oh, sure. You can reach me at Shane@wolftraderfutures.com. You can email me, and then I also have a couple Twitter feeds here. Okay, I have one of them which is the paid service, which is @WolfTrader1. That's the red one, and then I have one called @WolfTraderInfo, which I haven't really updated too much lately, but that's the green logo. So if you see @WolfTraderInfo, that is the free service. I haven't been posting too much lately, but I do plan to post. And then the paid service, the $225 a month service, is the red one, and I do post trades daily on there, and I post that basket of trades. So for example, this is the basket here. You can see these trades. Every day we post 10 symbols, unless there's some type of a hiccup. I mean, sometimes I have technical issues with software and things like that, but for the most part, we do post every day 10 trades on all of these symbols. And again, but I emphasize to people to look at the bundle as one big trade, because I don't like to focus on any one symbol. I like to look at 10 of them at a time and look at that. Hey, that's one big trade for the day, and that's what I'm interested in. That's as a trader, I look at the whole, not the fragments.
Oh, that's great. Hey, listen, thanks for joining us today, Shane. It's very, very informative, and we certainly like to hear it because you've been so right over the years, and we're certainly going to be watching it. And, still halfway. We're only, into the market about 20-some minutes, and we're down, almost 400 points, and we haven't seen that in a long time. So the slightest bit of short covering would call this market reverse easily, I would think, but you just never know.
The market needs help. I mean, the market can't do it by itself. And again, I appreciate you having me on. I know this was a last-minute thing, but just keep in mind the market can't do it by itself. So you've got to watch it about 10:30, and that's usually when the Fed, all these auctions start opening and all these different processes begin. The banks get going. So right around 10:30, I expect them to come hard today. So we'll see what happens.
Hey, thanks a lot, Shane. We really appreciate it.
Thank you, Larry. Thanks, everybody. Have a great day.
You bet. It's good to have him on to tell us what's going on with the Fed, and he's certainly been spot on over the years. So keep a close eye, and he mentioned 10:30, which happens to be a very interesting time to take a look at it. Now, the currencies are acting pretty well. We got the euro is up. The British pound is held up extremely well. The Japanese yen, dollar yen is doing what it's supposed to be doing, and that's moving down. So all of these things are lining up. The only problem with the currency is the Chinese renminbi. It's trading above 7 for the first time in a long time. But as I mentioned before, just a few years ago, back in '95, it was at 12. It went from 12 to 5 and 5 to 7. So that's not a big deal. But, it is when the news is pushing it, over and over again. So we'll keep a close eye on that as we look. The notes and bonds have had just a tremendous move into bonds, folks. I mean, we went $2,000 straight up at the opening last night on Sunday night, and then we reversed and gave 1,000 of it back, and now we're about halfway back. So a lot of things happening in the bond market. The key to that today will be what the open interest shows at the end of the day. If we look at those 2-year, 5-year, and 10-year notes, and the open interest does not increase, or it decreases, if it decreases, there's going to be there'll be a big reversal. We've seen this over and over again in many of the things that we watch. So I'll be watching that tonight for sure. I mentioned that I will be doing Tom O'Brien's show today between 3 and 5. I've got some things that I want to share with you about, how I look at the market and where these things came from, and part of the research that I went through to get to where I am, wherever that is. But we'll be doing that for sure. And then tomorrow we'll be back at the regular time, and should be okay. We've got to pay a few bills here. When we get back, we're going to talk just a little bit more about the U.S. dollar because it's such a critical level, and we'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I mentioned the importance of 2875 in the E-mini S&P. I've reposted it again. You'll notice that is a very important retracement number. As you can see, once we went below 2910, it was really headed down to that number, and so far we've gotten to that number. That is more than one standard deviation away from the mean. That usually is some support, but we're also setting at a 50% retracement in a very, very oversold market now from Friday through all night Sunday and where we are today. So keep an eye on this time frame between 10 and 10:30. That's when Shane said the Federal Reserve comes in many times to do their spin and drain or whatever it is that they do. But keep an eye on that, because if the market does hold, their shorts covering would be very, very expected, and because this market has been bullish and we've seen it bounce back before. But anything below 28.70 would not be a very, very good sign. In fact, it would be very bearish. I believe we're going to go through there eventually, but that's something that we really need to pay very, very close attention to. Part of the bearishness that we've seen, folks, has been because of the banking index. We've always watched that, and the reverse that we had here, we'll be able to see at what's going on here. Hey, Basil's going to be on at 10 o'clock with Tommy O'Brien. Make sure you don't miss that. He'll be coming on next, because Basil really knows this stuff, folks. He's a master. So try to listen to Basil coming up next. He's got some great stuff, and he certainly makes Elliott wave. Well, the way he does it, it's understandable. So keep in mind that that's something that you might want to listen to coming up at the break. So live every day in an attitude of gratitude, and may God bless.